Well, a warm welcome everyone, and welcome to our October update. Let's dive into how global markets performed in October and what we can expect moving forward. October brought a mix of results. Equity markets experienced a slight pullback, with the MSCI World Index down nearly 2% in US dollar terms. However, in Australian dollars, it gained 3.84% thanks to a sharp 5.96% drop in the Aussie dollar. Bond markets were much more volatile, as strong economic data from both the US and Australia pushed bond yields higher. Notably, the Australian 10-year bond yield surged by 60 basis points to reach 4.52%. In Australia, the S&P ASX ordinaries fell by 1.33%. The consumer staples sector took a hit, largely due to a disappointing update from Woolworths. On a brighter note, financial sectors outperformed, rising by 3.29%, while healthcare and communications saw slight positive gains. Over in the US, equity markets faced a sell-off towards the end of the month, with the S&P 500 down nearly 1%. Despite this, the earnings season showcased strong earnings growth for many companies, particularly in the financial sector, although some large tech firms disappointed. Emerging markets, especially China, struggled, with the Hang Seng Index down 3.86% as hopes for stimulus faded. Looking at economic data, Australia reported robust jobs growth, adding 64,100 jobs in September, which has strengthened the labour market. Consequently, expectations for a rate cut from the Reserve Bank of Australia have diminished. Meanwhile, the US economy has continued to grow at a solid 2.8%, bolstered by strong consumer spending. Globally, central banks in Europe, Canada and New Zealand have been cutting rates as inflation cools. However, China's economic recovery remains uncertain, with GDP growth at 4.6%, falling short of expectations. As we look ahead, markets are still hovering near all-time highs, supported by strong earnings and a positive economic backdrop. However, with the US election outcome, it could introduce some uncertainty, and moderating growth expectations may impact valuations. The key takeaway: we're still navigating a soft landing scenario, but risks are present, so it's crucial to stay adaptive with your portfolio. Until next time, we'll be watching.